Hello, beautiful. I am coming in hot today with what I think is the very most valuable Sunlight Tax podcast you're going to hear all year long. This is going to repeat some information that was in a podcast in January last year, but guess what? January is the time to get organized. So, this is a great and important time of year to set up a couple very simple systems to just get yourself on track all year long. And I'm going to spill the tea today. You're going to hear everything in this episode, but I want you to know that, of course, my larger program, Money Bootcamp, has more of this. This is a taste of what is inside my larger program, Money Bootcamp. If you ever feel called to see what's inside of that, you can find it at my website, sunlighttax.com/moneybootcampimpact. All right, so let's get started. This is your January checklist to get yourself organized for the tax year. So first things first, I want you to record your odometer. All right. This should be a task you do around January 1st every single year. Listen, if it's a couple days after January 1st, close enough, right? You're as close as you're ever going to get to January 1st of this year. This is really important because no matter how you track your business mileage, whether you use what's called the actual expense methods or you use the standard mileage method, which is the one I usually recommend, most people get more money that way. Either way, you need to report on your taxes how many miles you drove total for the year. And for that reason, recording a simple habit of recording your odometer around January 1st every single year is going to help you know that number. Okay. It's just one thing you have to do early in the year. Just go snap a little cell phone picture of it or write it down in your notes app on your phone, and then you've got it. All right. And what this does for you is it gives you an ending mileage for last year's total miles driven. And it also gives you a beginning mileage for this year's miles. Okay. Really lovely, easy peasy, simple task you can do now. All right. Also, I recommend while you're at it, set yourself a little calendar alarm for this, right? You want to do this every January 1st. So go ahead and set yourself an alarm. If you're in my program, Money Bootcamp, the calendar that's part of the program is going to prompt you to do this every January 1st. So you don't have to set that alarm. I've already done it for you. All right. Next, tax documents. One of the most important things to know about January is it is the month you're going to start receiving your tax documents. So all those 1099s that if you worked for anybody, if they paid you over $600 for the year, then they owe you a 1099. And so you should expect to get 1099s. The deadline for issuing 1099s is January 31st. And so you should start to receive them throughout the month of January. And if you haven't received them all by about February 2nd, then they're late. And you should definitely contact the person who owes you one to make sure that they do intend to send you one, because you need it for your taxes. And it's a real pain in the butt if you file your tax return and then you receive a late 1099. This is a thing that absolutely does happen. It's super annoying. It gives you a new PayPal relationship with the IRS, which is nobody's favorite pen pal relationship. So get in touch with anybody who owes you a 1099. And what you want to do is you want to give yourself a place to put those documents. Now, of course, you're going to get other tax documents too. They're not all 1099s. You might get some W-2s. You might get your spouse. Who knows what your spouse does? They're going to get their tax documents. You may get a HUD statement if you bought a house in the last year. You may get mortgage interest statements, tuition statements, brokerage statements. All kinds of stuff is coming in. And your most important task is really just to have a place to put them, right? And all you need to do is designate a spot in your house. It can be the lower left-hand corner of your desk, right? It can just be that. It can be a hanging file folder in a filing cabinet. It can be, the pile on your kitchen counter, maybe. But whatever it is, you want to just make sure that you have a consistent location. All right. Now, some of these documents are going to come in the mail. Some are going to come over email. So some companies are digitizing this process. If you have consented to it, you might be getting these documents digitally. So of course, you also need a place to house these in your inbox. So what you want to do is create a tax file that's for paper that's going to say 2024 tax documents, right? Remember, taxes are retroactive. I'm not misspeaking. These are documents from 2024. You only get them in 2025. So you want a paper file folder that you're going to stick them into, and then you want a digital one in your inbox. And you can just label it, tax year 2024 tax documents, right? Something like that. Okay. Awesome. Also, if you moved this year, I highly recommend that you reach out to anyone who owes you a W-2 or a 1099 and confirm your new address with them. And this is something you want to get on as soon as possible, because once someone issues you a 1099, if they're sending it to the address that you wrote down on a W-9 you filled out for them, they've done their job. They don't have to worry about it anymore. And the IRS is going to get their copy of the 1099 that you should have, and you're not going to get yours. This is a really easy way to accidentally fail to report some income, and the IRS is going to catch you on it 100% of the time. So you definitely want to make sure you don't miss any 1099s or W-2s, brokerage statements, etc. All right. So reach out and make sure address changes are recorded by anybody who's sending you one. All right. On the flip side of 1099s is if you owe a 1099 to someone, right? Because if you're a self-employed person, you may well have hired a web designer, a graphic designer, a social media manager, a virtual assistant, a studio assistant. I mean, on and on and on. You could name a million different functions and roles that you might hire for. If you paid anyone over $600 to do work for you in your business, this is not for personal stuff. It's not a hairstyler, house cleaner, that kind of thing. But for your business, you owe them a 1099. Now, don't worry. Next week's episode, I'm going to deep dive on 1099s. So stay tuned for that one. And if you're in Money Bootcamp, this Thursday, the 16th of January, I'm doing a live session to teach you about how to issue your 1099. So if you're in bootcamp, stay tuned for Thursday. We'll get all up in it. But the short version that you want to know is you're going to have to issue 1099s to anyone you paid over $600. And the deadline for that is January 31st. So this is something you need to do this month. And I want to warn you that the IRS is getting stiffer and stiffer and stiffer in their penalties. The penalties for failure to issue a 1099 that you owe have gone up this year, and they start February 1st. Okay. So this is real and you do have to do it. But the good news is it's not that hard. It doesn't actually take that long. Your biggest task really is to get your bookkeeping done so that you know how much you paid everybody. So you know the correct amount to issue those 1099s for, and that you have the Social Security number, ITIN, and mailing address of anybody that you paid. So if you haven't gathered W-9s from these people, now's a great time. All right. And we'll get more into that on next week's episode. But filing 1099s you owe, that is a part of your checklist for January. All right. Also, another thing you have to do this month, January 15th, remember, is your fourth and final estimated quarterly tax deadline for tax year 2024. So this is the time for you to make that final fourth quarter payment. So be sure that you get that done as well. And remember, if you've missed payments before earlier in the year, that doesn't mean you have to keep missing them, right? You can make the last deadline. You can save yourself one of the 4 penalties. You might not save yourself all 4 if you've missed some deadlines, but you don't have to miss this next deadline, right? So the 15th of January is your last quarter, and you need to make your last estimated quarterly tax payment. Again, if you're in boot camp, this afternoon, we're doing a session on, we're doing a live session on how to make that payment. So if you're in boot camp, every single quarter, I do a live deep dive session on how to calculate and pay your estimated quarterly taxes, especially when your income is variable, which is the tricky scenario. And let's face it, most of us who are self-employed, our income is variable, and this is the reality. So I can understand that you need a little bit of hand holding and extra TLC around that issue. All right. A business basic that I just want to reiterate, it's not necessarily a January thing, but it's nice to do it in January if you've been meaning to. If you don't have one yet, if you're early days in your business and you don't yet have a separate bank account for your business, now's the time. Open one up, because what it means is you're going to be able to have clean books for a whole year if you get one open nice and early in the year, like in January. In general, you always want to have a separate business bank account. This is important for many, many different reasons, but it's super, super important. So I want you to do it. Okay. By the way, it is okay if this business bank account is actually technically a personal bank account, like according to the rules of your bank. It's not important that it is specifically what the bank calls a corporate account. The point really for taxes is a separation. It's an account that you treat as your business bank account, right? So you deposit your income that you make through that business into that account, and you pay your expenses out of that account. All right, that's the part that's really important. Okay, now receipts. I want you to understand that receipts are different from tax documents. Tax documents you need to do your tax return. Receipts are something different. Receipts you only need in case of an audit. You do need them. They're legally required as the proof that says, yes, I didn't make this up. This expense really happened. But you don't need to do your taxes from them. In fact, you shouldn't. That's what that bank statement from the business bank account is for. But you do need to keep your receipts. So a wonderful, wonderful unlock that you might not have realized is that you never need to sort receipts. There's a really simple way for you to keep receipts in chronological order and just put them in cold storage so that you can have them and access them for the year that you want, for the dates that you want at any time. And here's my tip. So what you want to do is when you're getting physical receipts, now receipts that you get in an inbox, right? Emailed receipts, your receipt from Amazon or wherever you're buying your materials from, those receipts are already going to be in chronological order. Those you just need to save into a folder in your inbox, okay? That one's pretty simple. But you want to create a digital receipt folder, so you want your receipts separated out by year. The reason there, it's a teeny scary, but the reason is that audits come by year. Generally, you'll be asked to show, for example, all your travel and meals receipts for tax year 2023 and 2024. Now, what's really nice is if you have 23 and 24 labeled and you can just pull those folders. What's less nice is if you throw all your receipts in no particular order into one box and you have to go through 10 years of receipts to find 2023 and 2024. That is a horror story, okay? So here's what you do. Create a digital tax receipt folder for 2025. So what we're talking about here now is the current tax year, right? Moving forward from now. And you're going to also create a hanging folder, like a physical receipt folder in in your filing cabinet. Unless you want to go ahead automatically and snap a photo and digitize all your receipts. That is also absolutely fine as long as they remain legible to the IRS and have all the required information. That's completely fine. And if you do that, yes, you can get rid of the physical one. Okay, so here's the trick. What you're going to do if you get a physical receipt is you're going to stick the physical receipt in the front. Okay. When you stick it in your wallet, it goes in the front of all the other receipts. That's the only rule you need to follow. When you do that, what it means is the front is always going to have the most recent receipt, and the receipts will remain in chronological order. And as you go backwards, they will get later and later in time. When your wallet gets too full of receipts and you want to dump them, you go to that dated hanging file folder, right? It's the correct tax year. And you put that pile of receipts you've got now in the front. And so that just keeps the entire folder in chronological order without you ever touching them. It's so nice. It's my favorite trick. Okay, So you're going to make those 2 folders for yourself for the coming tax year 2025. You want a place to put your new 2025 tax receipts, both digital and physical. All right. And lastly, just the last thing to know about receipts is you should keep them for 7 years. Okay. So if you want to do a little cleanup, you can take any receipts that are 8 years old and older and you can recycle them. So nice. Just clean out your files. That's absolutely fine. But the reason you need receipts for 7 years is because the IRS is allowed to go back 6 years to audit any expenses that you may have had. Okay. So you always need to have 6 years of receipts available. So if you keep them for 7 years, then there's no wiggle room. You've definitely got whatever receipts you need. Okay. But after 7 years, you can let it go. Now, the one exception here is if you have depreciable property that has a lifespan of longer than 7 years, for example, the deed to your house, perhaps, or your business vehicle. I think it's probably obvious that you would not throw out the deed to your house. We tend to hang on to these things for a very good reason, but just an FYI, you don't want to dump that. Okay. All right. Well, that's it. Those are my tax prep. That's my tax prep checklist for January to help set you up with a couple really simple systems to help your year be so good and so easy, and make sure those tax documents and those receipts are orderly and in the place you need them to be when the time comes. All right. I hope that really helped y'all. And of course, if you want to check out my program, Money Bootcamp, we do more of this. January is a hot and heavy month, and there's a lot of live sessions this month teaching you about things like how to issue those 1099s. So if you want to check that out, sunlighttax.com/moneybootcamp-impact. And next week, I will be here for your 1099 questions. Feel free if you want to send me a voice memo on Instagram. I'm really happy to listen to your 1099 questions, and I may integrate them into next week's podcast episode about how to issue 1099s. All right. I'll see you next week. Bye, everybody. Thank you for watching. If you like this video, be sure to like, leave a comment, and subscribe to my channel. I'm so grateful for that. This video is for education and entertainment only. Nothing in this episode should be taken as individual tax or financial advice. You can find all the tools, books, and links I reference at sunlighttax.com/podcast.